Good afternoon, everyone. Welcome to this week's Elliott Wave Forex and Cryptocurrency Analysis webinar. Thank you for joining me this morning. I hope you're all having a wonderful Sunday. It's a beautiful morning in Johannesburg this morning. It is nice and chilly weather. I hope you're all having a great trading week as well. So August is typically a very scrappy week, but the market has been moving. We've been able to trade. Right, so what do we have lined up for today? So today I'm going to spend the first 5 minutes just to give you a tip, like maybe that can open your eyes. That is Elliott Wave in 2 minutes. This is something that I usually start with when we do our courses. So I'm just going to show you what Elliott Wave theory is in 2 minutes. All right, so stay glued, and that is what I'm going to show you this morning before we start with the market analysis. That is Elliott Wave in 2 minutes. Then you can go and trade. I'm kidding, it's not that easy, but that is just a tip. I mean, we do not have time to give you a course here. So if you're interested in the course, send me an email as per the description on my videos. Right, but before we talk about the course, let's talk about how you can utilize these webinars. If you're watching on a video, this is what you can do for yourself. So what we have here is on all my videos since the beginning of January. If you are interested only on specific pairs, you can just go under the description and you click on show more. What you'll find here under the show more tab is that all the pairs that I'm going to look at here today are time-stamped. So what that means is that if you're looking for only AUDUSD, you just go and click on AUDUSD and AUDUSD analysis starts. So you do not have to look around, toggle around and waste time looking for pairs, or have to watch the whole video looking for a specific pair. So that makes life very easy. You can take one pair also and track it 5 months back, 7 months back if you like, just so you can see if this is accurate. And I believe it is very accurate. That's why we've got it all there. It's all there in black and white, inverted commas. You can go and check it. So that's what we have for you. All right, so maybe if we could just look at some of the trades. I didn't really prepare the trades that we are looking at in the week. We're still running the same trades as we've been running last week. So if you just look here on, I'm just going to go to my channel. On Slack, we use this on Slack. We use Slack for our premium group. So this trade we took last week, this was a bounce. This was a bounce on US dollar CAD. Okay, this was a bounce on US dollar CAD. This was before it happened. Here it is. So you can see there how that one played out. Okay, so the rest of the pairs, just the major ones that we're running, is this pound JPY that has been going so well so far. As you can see here, we wanted this drop. I was not interested in this drop. Okay, I just wanted it to come back to this level around the 150 mark. So there was 600 pips up, and now we are about 800 pips down. Okay, about 800 pips, 900 pips down up to the 140 level. I'm still expecting continuation on this one to the downside. You can just go check your charts. I did not put in the charts that are how it played out afterwards, but you can just go check it. If you're a trader, you should be able to go check that out and see how it is playing out. This was last week. This was how it was playing out last week. If I can just show you on the platform as well, this is how pound JPY has been playing out, and it's been playing out amazing. I shouldn't do that because okay, that is pound JPY. You can see that down move, the up move, and the down move. So you see, you don't, with a wave theory, that's the advantage. You don't just trade one move. You have a couple of moves forecasted way ahead of time. So you can see that is the 600 pips I was talking about to the upside, and then the 900 pips that we're trading to the downside. I'm still expecting continuation here, but we're going to update this as we start with our analysis. All right. Okay, so that is how that is playing out. And another amazing one, so I'm just going to look at the last two now. I'm not going to look at everything else. I'm going to look at the major ones that we're looking at. Okay, this is still continuing to the downside. That is pound US dollar. Some of the amazing ones for this year are the CAD pairs, specifically EUROCAD and pound CAD. All right, so let's just look at before this played out, how this played out before. So this is EURCAD. So this is how amazing this is. EURCAD, we sold it right at the top. Okay, those who've been watching the webinars will understand why we sold it right at the top. We're going to update that. We'll start with the analysis. Look how amazing this is. We wanted this to come back to this level here. We bought this piece, okay? Bought this 200 pips, and then now we are over 600 pips to the downside on this pair. Okay, so that is how amazing this plays out. This was the first target, initial target. 2 weeks back, I mentioned that this is going to break this, and then I did show why it was going to break that level as well. So you can just watch those videos. Just go and click on EURCAD, and you can go to PoundCAD as well. So this is still EURCAD, having completed that first piece to the upside. Okay, and then now it is, if you look at your charts, you can see that it has completed that, and now we're looking for this to break this up to the downside as well. It is now retesting that level. It is not a support and resistance level, guys. I don't trade support and resistance. This is now the same pair as it was going down. You see it was going down now. That move, as it's going down, we know that it's going to make a pullback. You see, this is the benefit that the guys in the premium group gets. They get an update on the trades, how it's going, because now somebody may say, okay, this is reversing now, and then they want to get out of the trade. I mean, you've sold the pair there, and now it's pulling back here. You don't panic because you understand how the market moves. It cannot just go in a straight line, but the challenge is knowing when is it a straight line, when is it an emotive wave, and when is it a corrective wave. So that is how that plays out. And as you can see, I'm tracking one pair here. You see, we expected that pullback, which we've updated, and now it is dropping. Okay, so this is when you understand how the market moves. Now this pair is around this area. Okay, it has already broken that level, and we did expect that it was going to break that level. So that is how amazing that works out. So I didn't show you PoundCAD. There's also PoundCAD that you can look at on the videos. You just go back in time and watch those videos. Okay, so this is just see if I can find PoundCAD here. Okay, that's fine. I don't want to waste time looking for that. You can just watch the videos and see how amazing that plays out. Okay, so those who are interested in attending the course, I see a lot of people sending me messages that they're actually learning a lot from these videos. So if you're learning anything from these videos, imagine what you can get from the course on a learning environment. This is not a learning environment. We're just applying the theory. We're just applying the theory here. So what you see here is a high level application of a whole lot of work in the background. Okay. So before we get started, as we are still looking at the trades recap, this is a pair. I think I've actually posted this during the webinar here. So I'm just going to go into it. The correlation between US dollar and gold. So I want to mention something about correlation, because people apply this incorrectly most of the time. All right, so have a look at this one. It's on the daily. I posted this on the 24th of June. That was 2 months back. This is the correlation between US dollar JPY and gold. So we're expecting that US dollar JPY is going to drop slightly and move back up. Okay, gold, I've been saying you keep selling gold. You don't look for anything else other than a sell. Okay, I've got a modest target there on gold. So this is how this plays out. It is on TradingView. I posted it last 2 months back. So that is how that played out. You got the move to the upside on gold, and look what, on US dollar JPY, and on gold as well. You can imagine how many points from about 1290 all the way dropping all the way to this level. So we're expecting this to end around the 1120 area. Okay, so we have been selling gold from this level, and I'm going to show when we'll do an analysis why we have been selling gold from that level. So this analysis is not in hindsight. I mean, they say hindsight is the best sight, but it does not. Hindsight does not help you in the forex market, because you need to be able to forecast ahead. So if you cannot see the market, what the market is going to do ahead of time, you cannot trade. It's always very easy to see these patterns after they've played out. Okay, so you need the ability to be able to focus them before they happen. And you can learn that on your own, or you can get training. Either way, anybody can learn this if they've got the right background. Okay, my background is I'm an engineer by profession. I'm a mechanical engineer by profession. So I've done a lot of numbers. I've even done a subject specializing only in numbers called numerical method in the first and the second year of my degree. And I never applied that knowledge in in my practicing, in my professional career, until I started trading Forex, and I realized that that can actually be amazing. So that is why I got interested in the Fibonacci theory as well. So that is how that plays out. So something that the guys are doing, because we've also had a market correlation seminar. So the guys do something like this. So correlation keeps changing, right? So what you need to keep doing, so this is a table, I don't know if you can see it clearly, this is a correlation table for different pairs. There is what we call correlation coefficient, right? So you need to have that coefficient to understand how the pairs are related, because sometimes you can find that there is a strong correlation. For example, I don't know if this is the one. So actually the right one will be this one. Let's have a look at this one. That will show you, I mean, everybody expects that US dollar JPY and Euro US dollar must be inversely correlated, right? But it is not always the case. Look at this one. This one was done by one of our traders. He showed the correlation for the last 25 days, and you will see that if there is an inverse correlation on these pairs, it must be negative. So this negative correlation between Euro US dollar means the strong correlation is 82%. It's 80, 80, 74, 69. That means it's positive correlation. But look at the relationship between Euro US dollar and EURJPY. I'm looking for EURJPY here. Here it is. You see, not EURJPY. I'm US dollar JPY. I'm looking for US dollar JPY here. There is some kind of correlation. It is weak correlation, but you can see that it is direct this time. Okay, it is direct correlation and not inverse correlation as we used to, but that is in the last 25 days. So correlation keeps changing all the time. Okay, so if you do not understand correlation, if you do not understand cycles and sequences, if you do not understand the Fibonacci Fibonacci theory, you cannot be able to trade the Elliott Wave theory. And I'm not saying that you cannot study this on your own. You can, but if you do attend the course, that will aid your training, that will aid your knowledge as well. All right, so let's get started. I said I'm going to show you Elliott Wave theory in 2 minutes. Let's see if I can do that quickly. So this is how the market works. So this is how the market works. So check this out here. Every single time, this is how the market moves. It moves in waves, obviously. We're just going to spend 2 minutes just to show you how this works. And if you learn and understand this, maybe you may start seeing the light and start seeing the charts in the right way. So this is how what happens every time. So what's always going to happen is that you're going to have a pulsing move. But before I show you that, so this, you need to remember that there's these two cycles, two type of waves that you can find: the cosine waves, and the sine wave. So let me show you that quickly. So I'm not going to spend a lot of time on this one. I've shown it in one of the previous videos. You can go and watch. So you've got something like that. So this is a complete cycle. This is a complete wave with a wavelength being this size, right? So that is what you call in high school a wave, a complete wave. Okay, with your amplitude there and your wavelength over there. Okay, so let's have a look. So you will have something like this as well. You'll have this one, which you called in high school a cosine wave. Okay, so this is exactly the same thing. The only difference between this and that one is that this one starts here. So what do you need to do to be able to understand where you are in the cycle? So this is just a different position in the cycle. Instead of starting your wave here, you started it here. This is where you started, with the cosine. So the cosine and the sine wave are exactly the same thing. You just need to understand where you are in the cycle. So now how does the market work? So you get a pulsing move, you get a correction. All right, not necessarily a pulsing move, a motive wave. Right, after getting that correction, you know that you are guaranteed to get another correction. So to know that the move or the trend has ended, you need to get an opposite move in the opposite direction, opposite motive wave in the opposite direction, like that, and another correction. So what comes after this? Obviously, you need to get another motive move to the downside, and then the cycle starts. So you see here, from here to here, you've got your complete cycle, exactly the same way as you would have here. It is a complete cycle, right? So now the new cycle starts. You get the same thing going on again: a pulse, a correction, a pulse. Okay, so the sequence keeps doing the same thing over and over again. And what you have essentially done here, notice, I hope this helps you. I'm going to take this off here. What you've essentially done here is, with this move that I've shown here, what you have here now is a motive wave, a correction, and another motive wave. And what you have here is a 1, 2, 3 waves. And that is your cycle, and then a new cycle is starting. So a move similar to what you have here. You see here, you've got a pulse in the opposite direction, and then you've got what we call here a disturbance. This is called a disturbance in the wave. A pulse and a disturbance. Okay, a pulse and a disturbance. That's exactly the same thing that you have in terms of how the price moves. Okay. Right. So somebody's saying, Dream Chaser saying I must repeat. So this is what I've done here. You can just watch the video and see what I've done. So this is 1, 2, 3 waves. 3 waves. Right. So obviously this is very high level. This is an introduction to the wave theory that we do when we start our course, and then we start going down into the basics as to how this works, so that you can understand how these patterns work. And obviously applying the Fibonacci theory into this and understanding how these cycles work, where you are in the cycle. So it's not as easy as 1, 2, 3, 4, 5. Okay. All right. Great stuff. So that is how the Elliott Wave theory works. So that is just very high level. So let's get back into our analysis. Somebody says that has just opened their eyes. So I'm glad that is the idea. I hope that works for you. All right, so let's get started with our analysis for today. All right, so I'm looking at the Euro US dollar and the DXY correlation. Let's get, you've got the dollar index at the bottom. Let's get Euro US dollar at the top. Okay, we've got Euro US dollar. That's Euro US dollar. Don't know why it moved down. Usually supposed to be right at the top. Okay. So don't let all these numbers confuse you. And get a lot of people sending me charts, and I don't like you. You guys sending me charts on WhatsApp and on Facebook, because I've got already 260 members that I have to look after, so I cannot look at any more charts. I only look at the charts from the members in the premium group. So if you wanted to impress me with your analysis, don't impress me with Euro US dollar. This is a simple chart. Go and try to impress me with New Zealand CAD or all the CAD pairs. Try to label those. Try to do analysis on those. Then if I see that you're doing great there, then maybe I can we can have a discussion. But this is a very easy chart, because it's all 1, 2, 3, 4, 5s, and this is very rare cases in the market. So let's have a look. I'm on the Euro US dollar and the dollar index charts. Okay, so this is how this is playing out so far. I'm only going to look at the last piece. So if you remember that we've got on Euro US dollar 1, 2, and internally here you see that nothing is forced here. You've got 1, 2, 3, 4, 5. Sorry, not like that. We've got 1, 2, 3, 4, 5. Okay, and this looks like we got a triangle here. We looked at the triangle here last week, and that triangle does something like this. And we try to do it with straight lines. I'm going to go into individual charts, guys. I know it's not very clear as it is now. We're going to go into individual charts. So I just want to do this for both pairs. 1, 2, 3. You've got a triangle A, B, C, D, E, and then you get a move to the downside. Okay, 1, 2, 3, 4, 5. Okay, I'm expecting one more down before we go to the upside. So now let's have a look here. Let me just put up, I'm not going to do on the dollar index. It's exactly the same thing. All right, so the dollar index is interesting in that you also have a triangle here. And this is the triangle that most people ignore, and it is there in the Elliott Wave theory. It is called the running triangle. You see where your move ended? It ended here, and then you get a move down. But your A move of the triangle actually breaks the previous high. Okay, and then you get A, B, C, D, E, and then you get a move to the upside. So this is a triangle. Even though it breaks the top here, go and read your Elliott Wave theory. You will see that you've got what you call a running triangle, and that is exactly what you have in the dollar index. On the Euro US dollar, you've got a normal. Let me switch off the labelings. On Euro US dollar, you've got a normal contracting triangle that broke to the downside. On the DXY, you've got let's do this one in straight lines. You've got a running triangle. A running triangle, you get your A breaking the previous high. So it's something that most people ignore. I don't know why. Okay, so I do not think that this sequence to the upside is complete. I'm expecting just one more up before we start correcting. One more down before we start correcting. Okay, so this should be clear enough. So if you look at the yellow here that I've done here, 1, 2, 3. Your wave 4 is the triangle, and then a 5. Is the 5 completed? We'll see that. Okay, now you've got a running triangle here. The same thing. You've got this one as your 3 here, and a 4. Sorry, 3 here. Your 3 is here. So this is the inverse. Shouldn't confuse you. So your 3 and your 4, which is your whole running triangle. This whole move is a running triangle. Let's take it off. See how clear this is. So nothing forced. You see that it is clear as textbook, as explained in the textbook. Okay. All right. So this is what you have. This is what you have in this thing. So what are we looking at here? We're either looking for, we cannot see now clearly whether this is going to give us one more down and then an up, but we know that it's going to give us a correction at some point. It's not going to go straight in a straight line like that. We're going to get a correction. Okay, so now let's go into the individual charts. I'm going to only look at Euro US dollar. Let's look at Euro US dollar now. Euro US dollars, go to one chart. Right, Euro US dollar. So last week I indicated that this was going to end around the 1331 area. Okay, that is exactly where that is reversed, but I do not believe that that is the area where we want it to be. Okay, let's just get that one done here. Okay, if you watched last week's video, we did mention that it was going to reverse in that area. Remember, we do not use support and resistance here. If you look at this pair here, and you look going backwards like that, this is not a major zone. So you've got a coincidence there if this is a zone. We're only looking at structural zone. And if you go further back, you'll see that there are levels that are insignificant in terms of that. And I keep showing you every week in, week out that there are levels that are broken, and there's no explanation why they are broken, even though they're supposed to be major levels. So now the question is, has this moved to the downside? This 1, 2, 3, 4, 5 in red. Can you see the 1, 2, 3, 4, 5 in red? Let's take this one out here. I need to go to the 4-hour chart so you can see this one clearly. Has that move completed to the downside? So if you look on the 4-hour, I'm still expecting this has gone up in three waves actually. 1, 2, 3. So now the question is, has this completed this lower degree wave 4, and are we going to go down to complete the wave 5 in green? You can take a screenshot and look at this yourselves. So anticipate that if we break this flag here that is currently playing out here, we're going down some more. Okay, I'm still anticipating that we're going to get one more down. So if we are wrong and this has completed the move as we indicated, this is what is going to happen. What's going to happen is that you're going to get this correction here. If you get this correction here, it's going to give you another 3 waves move to the upside. Okay, so if you get that 3 waves to the upside, you may keep getting these 3 waves moves to the upside, a bigger one and another one, just like that. Eventually, you're going to have that correcting that whole move from the top for one more down. So what we're having here is not a reversal. We're expecting a correction, a deep correction. So watch out for these levels here. The current level, you do not rush this one when market opens. Let it play out, and then you will see what it wants to do. So if it's correcting, then you know it's going to start correcting to the upside. And then if you're getting a passing move to the downside, you start waiting for a correction here, and then you're going to take it down for the last move to the downside. When you get to the blue box, you're going to be taking it up. And that's how you look at Euro US dollar. Easy like that. So now let's look at the rest of the pairs. So that's how you look at Euro US dollar. I cannot give you any more detail than that. Right, Pound US dollar. Pound US dollar, as we're expecting Euro US dollar to break down for one more. That's exactly the same thing we're expecting on Pound US dollar. If you look on the daily on Pound US dollar, let's quickly show you the daily. I'm looking at this whole move to the downside as a pulsing move like this, giving us 1 and then running flat there, giving you a 2, and then we're looking for this to go to a wave 3. In fact, pound US dollar, actually, I'm looking for it to come down. So for now, the way pound US dollar is coming, it looks like it may even break this level. Unless the only way that this will not break this level is if you get a deep correction here. There's a reason why I'm saying that if you get a deep correction, then it won't break. It may bounce back up for one more. But if you do not get that on pound, if you do not get that deep correction, this may be going all the way down, even lower than the previous Brexit low here, and go all the way down. So the only way that will prevent, only thing that will prevent that move is if you get a deeper move like this, because then you can get a move like that and then a down. Okay, so let me switch off here so we can I don't confuse you with the numbers. Let me do it one more time. If you do not get a deeper move like this on pound, okay, if you get a deeper move like this, then this pound can go back and retest that level before it comes down. Okay, if you don't, this will keep going like that. It will keep giving you small corrections. It will keep giving you small corrections, and you're going to keep getting a move like this, which is a pulse, a correction, and a pulse. Remember what I started with? A pulse and a correction and a pulse. Pulse, correction, pulse. So 1, 2, 3. If you don't get a deeper one here, a deeper one will tell you a different structure like that. Okay, so keep an eye on the pound. For now, look for small time corrections like I've shown you now on the 1 hour. If this one breaks to the downside, you're taking it down. That is the one that will give euro US dollar that one more before you go down. Okay, one more before you go down. So look out for this flag. All right. If it doesn't break, you've got 1, 2, 3 up like that. It may give you one more, 1, 2, 3 like that. Still, that will just be a bigger correction taking you down like that. Okay, so you need to keep an eye on this one. It is corrective, it is not going up, it's just correcting at this stage. So that is pound US dollar, US dollar CAD. US dollar CAD, that is the 1 hour. Let me show you the 4 hour. So I don't like these moves. You can see here there's no correction. There's a pulse, no correction there. So this is what I think will happen here. I'm expecting that you're going to get a correction here on US dollar CAD. You're going to come and retest this bottom. You're going to come back up here, and then you're going to come back for one down before you go up. So I need to show you on the 4 hour why I'm looking at it like that. Okay, so let me show you that again. If this corrects here like that, you're coming down here. And then you're going to come back and retest the top, come back down, and then you go up, making this a regular flat. So let's look at it on the 4 hour quickly. 4 hour. Okay, so let's show. So this is the structure that we'll be looking at. We'll be looking for this one. This is already, okay, I have to remove one. I've got a duplicate. WXY. So now there's also a challenge where people cannot identify the degrees. They don't know the difference between a WXY move and a WXY XZ. So you find a lot of WXY XZs that are incorrect. So you can find a WXY XZ, or you just find a higher degree. So this one could have been a 1, 2, 3, 4, 5 WXY XZ, but it is not. It is actually a going for another degree. So you've got 1, 2, 3 down here. You've got a correction here, which is this regular flat that we're anticipating here if we move to the upside. And then we're going to be looking for this one. We're going to be looking for this one to give us another 3-wave move before we push higher. Okay, so we're still expecting one more up. So I keep forgetting to switch this off. You see how clear it is without the numbers and the letters. So that is the structure that you'll be looking for. Look at that red structure. Impulsive move up, down, and then up before we get another correction. Then that gives you a WXY move. Okay, so this is obviously high level. There's a detail in what we look in the way we look at this. So that whole thing will be a corrective structure like this. This will be a corrective structure for one more up. So we can see that as much as this is going down, there's still one more up that we're expecting. So what do you look out for? You look out for this correction here. Okay, if it changes and it gives you an impulse, then you're going to look at this one as a 1, 2, 3, and then still it will give you another one like that. You see, it is a corrective structure regardless. So it's just a matter of how this corrective structure is going to play out. It's like playing a puzzle. The more pieces of the puzzle you have, the more information you have to complete. All right, so either way, when this correction is complete, you will know which one. All right, so that is USDCAD, USDCHF is a lot clearer. If I go to the daily, you'll see how clear this is. Okay, so look at the daily, and on this, we're looking at this as a correction here. This move is a flat correction. Now you got to move to the downside like this. This move goes and touches the top here. I'm expecting that this will come back down for one before it actually goes all the way up. Okay, so that is how this is playing out here now. So what are we looking out for here now? We're looking for this to possibly break this small flag to the downside here before it goes up. And why will we look at it like that? So it is because of this structure that we've been looking at for the last couple of weeks, months. Look at this one here. We've been looking at this diagonal for the last couple of months like this. We've got a diagonal there if you look at that. So that is the diagonal that we're looking for. And here is what we're looking for this B to complete before we get one up and then a down to the B. But let's not look at this now. We've got enough information to tell us that this is a corrective structure and it will eventually go up for one more before we complete to the upside. Okay, so that's how we look at this. That is US dollar chief on Audi US dollar. Let's look at Audi US dollar. Let's go back to the daily. So if you look at Audi US dollar, it's very interesting. Audi US dollar, let's switch off here. You've got a clear pulsing move to the downside. Remember Elliott Wave in 2 minutes that I showed you? You've got a clear pulsing move to the downside. And what you're having here is a nice ABC move and an AB base pattern. And now you're getting this move to the downside. So similar to pound US dollar, if you do not get a deeper correction here, this may even break this level and continue to the downside. If we don't get this deep correction here, this is going to go all the way. So let me just clear this up a little bit. If you do not get this move, or if you get this move, you're going to get a bounce. You may get a bounce like this. So this will be a 1, 2, 3, 1, 2, 3, and then it will give you a flat correction before it goes. But if you don't get this is the only thing we don't know, whether we're going to get this move here. If we don't, then we're going straight down. We're going straight down, we're going to break this level. Okay, that's not happening overnight. You have to keep watching this. We're still coming down here. I'm still expecting that this will be a corrective structure here for one more down. So let's go to the 4 hour and see how this is playing out. So similar to the what we have on Euro US dollar, you've got this 3-wave bounce to the upside. This 3-wave bounce does not mean reversal. It's 3 waves. 2 things are going to happen. Either that's going to be a flag and comes down like that, or it can give you another one here, giving you a WXY. 1, 2, 3, and a 1, 2, 3, giving you that as a WXY move, and then you drop in this degree. Obviously, I'm not showing you all the related degrees with that. I'm just showing you need to look out for this structure. If it plays out like this, then you're getting one more down. You're hoping for one more down. Okay, so as long as you do not get that deep correction, you keep selling Audi US dollar. All right, and some of the things that the guys have been doing. So I think that is why I had this. I had that correlations open. I don't know if I can find it quickly. If I can't, then I'm just going to move on, guys. Sorry about that. Let's see if I can find it quickly. So what one of our traders was doing here was to, or did I skip it because I had found it? Was to relate the metal pairs. That is your Audi pairs, your New Zealand pairs, together with the gold and the silvers and the indices, because there is a correlation relationship between this. So to verify that correlation, they go and construct this table, which they have learned during the market correlation seminar, so that they can understand the strength of the relationship. So just to show you that there is a relationship between the Audi US dollar and gold. Here is this. Let me bring out gold here. because they are both metal pairs, right? So let's bring gold on the side. I'm not doing analysis on gold as yet. I'm still going to look at gold, but I just want to show you that there is a relationship between these two pairs. So on the left hand side there, we've got gold. Let's put on AUD US dollar on the right hand side. Sorry, gold on the right hand side. Let's see. Let's just bringing this up, guys. Sorry. Give me a few more minutes. Right, so that is gold, and on the left-hand side, there's AUD US dollar. I need to put it up on the daily as well, so we can compare apples with apples. So if you look at this correction that is happening on AUD US dollar, this correction here, it is exactly this correction that is happening on gold. And now we are on this down move. Now we are on this down move on gold. So there is a clear-cut relationship between AUD and gold. And if you do the same thing with AUD and with New Zealand, you'll see that there's exactly the same relationship. You had a 1, 2, 3 going up there, and same thing here. If I just put on here, this is where this one starts. So you see where those corrections starts. So where you see this line, on the left hand side, you'll see where I put the white line, the vertical white line, where it is the same dates on both pairs. So that's where the correction starts. That's where the corrections ended. You see, they ended on the same date, 31 January, right? And then they're coming down at the same time. That is like, there's no clearer correlation than that. There's no clearer correlation than that. So we know that as long as gold is still going down, and you can see gold is going down here, AUD US dollar is going to do the same. Okay, but we're going to need to monitor gold when it comes to that level, but we're still going to come to gold. So AUD US dollar, you keep selling every time you get a correction like that. Even though it looks like it's going up, it is not reversal. It is not confirmed reversal unless it gives you a clear corrective structure here for one more upside. Okay, otherwise you're going to keep selling it. That is AUD. Now let's look at New Zealand. It's exactly the same. It's also a metal pair. AUD is coming down. That is that correction that we are looking at. So AUD, as long as you do not get a deeper correction, will come and break this and go straight. Okay, so similarly, you keep selling this. So there is a clear relationship between this. And if you look at, let me just go back one. Let me just go back one on Euro US dollar. You'll see exactly the same thing. So AUD, Euro US dollar, same thing. You see here, it is very bearish. There is no sign of a reversal here. Any sign of a reversal is just going to be correction. So the same as those other pairs, this will keep coming down. As long as you don't get this deeper one correction that we're looking at, this will keep coming down like that in a straight line. So in a pulsing move like that. So I'm expecting that we're going to get a deeper corrective move on all those pairs that we're talking about that I need a deeper correction. If they don't give us a deeper correction, they're going to keep selling like that. A deeper correction will just be an advantage for those that are not on the sell on this one as yet. So this will keep coming down. All right. So let's keep an eye on those pairs. So New Zealand is exactly the same as we've said. You keep selling. This reversal does not mean anything. This candle does not mean anything until it is confirmed by a flag like that. But even so, it can still be bearish. All right, so let's carry on. Lastly, on the US dollar pairs, look at US dollar ZAR. So US dollar ZAR is a very interesting pair, and this is what this. Excuse me, guys. We're back on, guys. Let's continue. Back live, right? So now we're still talking about Euro ZAR, and this is very interesting. If you've been following these webinars, this is how we bought this year. We waited for this impulse and this correction, and we bought this anticipating that it is going to only give us a 1, 2, 3 wave move like that. But when it corrected here like this, then we started hopping on again. Okay. Right, so we ended this cycle. If you remember, we ended this cycle up to wave 5 here. 1, 2, 3, 4, and then extended wave 5. And I said here, we needed to get a corrective structure. Right, so after the corrective structure, you expected that you're going to get a pulsing move to the upside. So you eventually got a pulsing move to the upside, and that pulsing move came out of as a result of news. And look what happens. A, B, C move. Okay, so even though this comes as a result of a news event. This is a 1, 2, 3, 4, 5 move here. This is a single pulsing move. It is almost a single candle, but it is a clear pulsing move if you go into the lower degree. You can't see it clearly as it is. So you can see that you've got a clear 3-wave move, even though it is a news event that drove the US dollar strength against the US dollar ZAR, against the ZAR. So this is how amazing this is. So what do we expect here now? So the rand the US dollar ZAR has reached 15 rand 34 and has made a move to the downside like this. And now it is making what looks like a corrective move to the upside. What does that mean? Let's have a look here. So even though this is a pulsing move, this is still part of the wave structure. So that's the nice thing about the Elliott wave theory. So this can still be a corrective structure like this, can give you a structure like that, a structure like that, and a structure like that, and give you a flat correction like that, and you still get another move to the upside. So for now, you don't rush in. This has completed its 3-wave move, that is that ABC move that I've shown you. So what you need now is a bigger corrective move. A bigger corrective move that will drive it even further up. Okay, so more US dollar ZAR weakness. Now here is the question, and I'm wasting time, but this is important. Look at this here. I know you guys know this Fibonacci, this simple Fibonacci theory. Why is it that even with the news event, this spike only ended exactly at the 61%? That's because that is a sweet spot. Okay, I've done the Fibonacci theory in one of the videos. Previously, you can just watch. I think it is one of the June videos. You can go and watch what we call the sweet spot. Okay, it's not just a matter of you sell at the 61, because at the 61 can just be a reaction that does this to the upside, and that will give you 1, 2, 3, 1, 2, 3, a big flat correction down and then an up. Okay, so I know I'm focusing way ahead here. I don't have enough information to focus all of that, but that is the possibility that you can get even with the spike. And that is how you look at the wave theory. Right now, what do? You wait. You stay out of the US dollar ZAR, you wait for this structure to play out. You wait for this structure to play out here and see what you get. Then you can hop on for one more. Okay, right, so that's how you look at that. So now let's look at the yen pairs. I think I'm going to move a bit faster from here. Looking at the yen pairs, looking at pound JPY. Pound JPY has been very rewarding from this point here, from when we made this 3-wave down here, and it made this three-wave move that we forecasted. 1, 2, let's show that clearly. 1, 2, 3. And then that drop, we've been selling that drop. We bought the 600 pips, which is analyzed together. I'm looking at this 1, 2, 3, another pulsing move, one more down here. Okay, so I'll be expecting here, if you look at this yellow line, you can see that it's an incomplete sequence. We need something similar to that, not something like that, something like this. I should have drawn this one in green. We'll be looking for something like this. Okay, a green color like that. And then another move to the downside. So eventually I'm looking for pound JPY to come down to that level. Or two things can happen here, because if I show you my labeling here, this move here, I've actually adjusted my labelings. Okay, my labelings have disappeared here. Let me switch off here. I think I had opened in 2 charts, that's why it left. So I'm going to show you with the annotation what I'm looking at here. I'm looking at this as a diagonal. This piece here, last piece here, is a diagonal. You see why we're looking at that as a diagonal. One. Let's clear everything quickly. I've got that like that, and you've got this one here like that diagonal. And what you have here is a big pulsing move to the downside. You look at a 3-wave move, which is a B, and your C, which ends as a diagonal. So what you essentially have is a 1, 2, 3-wave move. And now this 3-wave move is correcting again to the downside like that. So if that is the case and you're getting this one as a correction, it means you're going to get one more up, maybe another 3 waves like that. That becomes now a bigger 1, 2, 3 W, 1, 2, 3 X, and then a Y. Okay, but for now, the information that you have, it's enough to tell you that you are going to keep going down as long as you get these corrective structures. So you keep selling the corrective structures. That's pound JPY on the 1 hour. Look at the corrective structures on the 1 hour. All right, so Let's look at US dollar JPY. US dollar JPY is one of my favorite pairs. If you look at the videos last year, I've been showing this structure, this pulse, and this three-wave move, 1, 2, 3, and this three-wave move here, correction, 1, 2, 3, and you get this one, 1, 2, 3. So you've got a zigzag in combination with an expanding flat. Okay, after that, what do we expect? We expected that this was gonna go with this move. We're expecting this move here, but it looks now like it did not go with that move. It has gone now in 3 waves, and this is how this is playing out. I'm gonna do this in green. I'll show you why I'm putting that as in green. That's because I'm expecting that there may be a structure like that, and that structure can go something like that, go and retest that top. What will this do now? This will be a, look at the degree in red, 1, 2, 3, like that. So now what does this become? If you see what I've done here, I did not do any labelings. I've just marked the structure. That's what Elliott did. He did not go and label the charts. He identified, he saw some patterns happening, and then he started labeling them. He started identifying their characteristics. That's what he has done. He did not go and label. So now what is happening here? You've got a W, you've got an X, you've got a Y. Okay, do you have a WXY exact? No, you've got another degree. You've got a W, and this W is this whole 3-wave move. Okay, and this is an X. Okay, if you come down here in 1, 2, 3, 4, 5 waves, then this is going to become an ABC move, but that's the story for a course, right? So that is going to be a Y move. So right now you're looking for this to be a corrective structure, and you're looking for this to retest the top. And that, because it's going correctively, you don't expect it to break, you can expect it to come down. So you see now, for the next couple of months, you know what's going to happen with this pair. And we've been trading this pair since last year. We've been looking at this structure from here last year. All right, so that's how you're going to look at this. And what do you look at in the near term? Let's go in the 4-hour. In the 4-hour, this is what you're going to look at. Let's see here if my labeling did not disappear here as well here. Okay, it has disappeared, unfortunately, but doesn't matter because you can see the structure, 1, 2, 3 down here, one more up, possible one here before you go, and this becomes all this corrective structure to the upside. So whatever is happening here is a correction. All right, so that's US dollar JPY. Let's look at the rest. EURJPY. Let's switch off here. Now EURJPY, if we look on the daily. Now here's what where correlation comes in again as well. Let's bring up pound JPY again. We bring pound JPY again. Pound JPY. So I want to show you that this structure on pound JPY, this one here, this euro, that the one that we're currently looking at, you're looking at this structure, 1, 2, 3. Pound JPY, we looked at the structure already, and it has been broken. You see here, it has broken that low. EURJPY has not broken it, so we expect that EURJPY will correct here, and it will break that structure, similar to what pound JPY has done. So this one is just lagging this one. Okay, it's exactly the same thing if you bring EURCHF as well. It is giving you the exact same structure. Okay, so you can see that this one is lagging pound JPY. So if you wanted to trade, you can go and trade euro US dollar, anticipating that it's going to break this low to follow this move here that was done by pound JPY. Easy. All right, let's go back to one chart. I think we're moving a bit too slow today, so I just wish I had more time, but I don't have more time. I only have an hour and a half on a Sunday to do this. Let's look at pound CHFJPY. So that structure that we're looking at, that 3-wave structure, is this one here on the CHF. So on the CHF is actually only just starting to go to make the down move. So what are we anticipating? I'm anticipating that we're going to have a move down. So in actually, all the yen pairs have got this structure. They've made this 3-wave up and then a down. So if you look on the 1-hour time frame on all the yen pairs, it looks like we're going to have one more down. So let's look at this one here. You see, go and look at all the yen pairs. You're going to see something like this. So it looks like we're going to have one more down or down on the yen pairs. You see here, we've got a 1, 2, 3 down. If you go to the next one, that is, which one haven't we looked at? So let's just go back, even if it's EURJPY. Okay, now that one has got 3-wave move up. Let's clear that, switch off and clear. Switch off and clear. You've got this one has made actually this one here, 1, 2, 3 waves. So you're looking for this one to break down here for one more down on the 1 hour. Right now, if you look at AUDJPY, the same thing, 1, 2, 3 waves. Looks like we're gonna get one more down here. New Zealand, same thing. Looks like it has completed those 3 waves here. So let's see how this plays out on all these yen pairs if you're not gonna get one more down like that. Okay, right, so that you need to wait for that confirmation. You need to get them to do one and a correction here like that. Otherwise, if they all just correct and give you structures like this, then it means that you're gonna get one more to the upside. So you see the market will tell you which one is coming either way, and you won't miss it. All right. I think that concludes all the yen pairs. Let's look at lastly is CADJPY. CADJPY on the 1 hour. If you get a corrective structure like that, then you're going back down. Same thing, if it corrects like this, then it's gonna retest this top here. Right, so 2 things you wait for. You wait for that correction. If you get that correction, you're getting this one to the upside, and that will give you the structure like a structure like this, one up like that. So that gives you 1, 2, 3 waves. So don't worry so much about that whole biggest picture. Worry about what happens here, because now you've got 1, 2, 3 move that is completed. Very likely that you're gonna come back with a move to the downside. Okay, so even if you've got more than one alternative, you must have a strong view or a strong bias on the one, right? Just so if circumstances changes, then you know when to switch. All right, so that is CADJPY, and that concludes all the yen pairs. Before we do the euros, let's have a look at silver and gold. All right, let's have a look at gold first. I think gold, I already showed you that correlation between gold and USDJPY. I want you to look at this one here. And this is how we trade. This is how we trade. It's easy to trade. You've got this long-term view here that I don't show when I come to the Sunday webinars. So you've got this 1, 2, 3, 4 that ends with a 5 diagonal here, like that. Okay, I know I'm drawing it very, it's not the neatest. 1, 2, 3, 4, and ends with a diagonal like that. So it's 1, 2, 3, 4, 5. 1, 2, 3. For the purpose of this webinar, I'm just going to leave this one as an ABC. It is not an ABC, it's actually a WXY, but I don't want to explain why that is not so. So from here, when gold made this corrective structure here, I have been saying in all the webinars, keep selling gold. Why? Because we have established a trend. Okay? Every time you get small corrective structures, you keep selling, you keep selling. Now, a whole lot of, how many points later? 2,000 points later, now you realize that that is the structure that it has been making all along. So that's why I say if you're not able to focus this ahead, and you only see this in hindsight, then you cannot trade properly. Look at this, what we're expecting now. A, B, C, okay? With a B correction here in the middle. That is what I'm anticipating. I've been calling for this level. I have not been saying at the support. I've been saying this is the level that will create a structure. Now, what about all these levels here that have been broken and were not respected, even though they were major? Okay, some call untested supports and all those things. Why have they not been respected with this? Because when the market is on a move, on a pulse, it does not respect any levels. It's not about the levels, it's about the structure. The price respects the structure, it moves in waves. Okay, so this is your 1, 2, 3 wave structure that you'll be looking at. So similar to Euro, Audi, New Zealand, gold is what we're looking at now. We're looking for this to come back down to this level. Okay, so if it breaks and comes down to this level, we'll update and check which structure it is making, because that structure is also possible like this, and then we can get something like this: a 3-wave move up, a 3-wave move down, and another 3-wave move up before we come down. So that is how you look at the structure. You get the trend, and every time you get a corrective structure, you keep selling. Okay, so that is gold. So what is happening now? It looks like it has made a reversal. It is not a reversal, it is a corrective structure. It has even gone up in 3 waves, which is more convincing for a corrective move. That's all you've got here. You've only got 3 waves. It has done this so many times. Okay, you've seen this happen here. 1, 2, 3, same thing. Every time it makes 1, 2, 3, you keep selling it. Corrective structure, you keep selling it. Okay, I know this is in hindsight. It's very easy to see this in hindsight and not when you're trading. So when you're trading and you see something like this, you panic and you think it's going up and you buy. And then it just comes down on you. 1, 2, 3. Okay, so every single time when you come to these webinars, I've been saying you don't buy gold. Even when it was doing this, I know somebody sent me a message when a chart when this was happening, when this structure was happening here, and he bought. Why did he buy? I'll show you now why he bought. He bought here while we were looking for this corrective structure. In fact, we were already short on from this level. This is where we shorted. Okay, so now why did he buy here? This is why he bought daily. This is why he bought. I'll show you why he bought. He bought here. He bought here. Why? Because he was thinking that this is the monthly support. He came and bought here. See, but we understood the structure. We could not have bought a structure like that. That's why we wanted this one here to the downside. All right. So that's how the market moves. Silver, last week we mentioned that we needed to come down to this level. Look at the level that we spoke about on silver. Has been reached. We expected to get this level. If we go watch the video last week, I said we were going to come to this level. This is exactly where we are. It is bouncing up here. Okay, there is still possibility for more downside unless it makes this structure here like that, which is going to be an expanding flat like that. 1, 2, 3, 1, 2, 3, and then more downside. Okay, so with silver, you just need to see what's going on here with this structure. Let's see what we have. Let's get this off. You've got this pulsing move to the upside, which I always say it does not mean anything until you get a corrective structure. But even this corrective structure does not mean reversal because it can come and do this, and this just becomes a flag like that. So keep an eye on that one. If you get the flag, you can buy it for short-term move to the upside. We're still bearish overall. Okay, so now that is where it reversed around the 14. Look, it just touches that level exactly. That's not because it's the support. When it is a structural level, it will respect it like that. All right, so that is silver. Now let's go to the euros. Looking at the euros, let's start with EURCAD. EURCAD, easy. You keep selling. Every time it gives you a structure like this, you keep selling. I'm not even going to go to the longer time frame. You can watch my previous videos and see why we sold EURCAD there, why we bought EURCAD there for 900 pips. Okay, and why we are over 1,000 pips down on EURCAD. Not just this 1,000 pips, and why we also traded this one here. Watch the videos for only the last 3 months. All these pips, all this we've been focusing on EURCAD. You just have to go and watch that. So even though this is on the daily and it looks like it is reversing, I'm not anticipating a reversal on EURCAD. Okay, so here look for a correction. It can still be coming down here like that for one, and then it carries on to the downside. So that's EURCAD, Euro New Zealand. So Euro New Zealand, likely that it may come back down here. It may come back all the way down. Let me show you the daily. You need to see the daily why we're anticipating that structure. So Euro New Zealand overall has got we've got a very high target on that one. See, this is the target on Euro. What is happening here is a correction. So the question is whether it's going to make 1, 2, 3, and then it goes. So you just need to see here. So now we are on this move here. There's a likelihood that this can just correct here like this, and then we go and retest the top there. Either that or it's going to come back for 1 down. Either way, that's going to be 1, 2, 3 down before it goes and retest that top. So you just have to see which one is coming there. So if you get a clear sell setup on this one, which you don't have right now, on Euro for go on the 4 hour, you don't have a clear sell setup. you will have a clear setup if it does something like this. It's just got a 3-wave up, 3-wave down, and if it does something like this, then you can start selling it to the downside like that. Okay, so for now you do not have that. Keep an eye and see what you get from that. That is Euro New Zealand, Euro Audi. So Euro Audi is also very interesting in that. Let's look at Euro Audi and I'll go to the daily here. Euro Audi, look at this here. Where's that move here on the 4-hour? You've got a textbook diagonal there on Euro Audi. Let me see if I've got my, I can't find it here. Okay, so I wanted to look at the trade that I posted while we were here. See, it is not showing here. Oh, here it is. So this was posted 12 December 2016. Now check how this one played out here. Okay, so I usually post these long-term trades. See here, the heading of the post was incomplete downward sequence. So I still wanted this to go a little bit up, one more down. And then we get this move to the upside. So this is how this one plays out for over 2,000 pips to the upside. Okay, it goes, you see it goes up as we expected, it comes down here in complete sequence to the downside, completes, right, excuse me, and then we get this one going like that, and then you'll see that we get a correction after that. That's what the correction, so this is the target reached. After the target, we make a correction. After the correction, you know that this sequence will need to make another move similar to this one here. So that is the move that we are currently in, that has made a diagonal. You'll see wave here, and then there's a diagonal. That is how this one plays out now. So you've got this one A, B, C, and your C ends as a diagonal. Right, so that's how that plays out. So have a look here. This is exactly how it happened. So you've got that move like that. Okay, so this is over. Even though you don't trade this in one go, you don't trade this in one go, you trade it in pieces. This is over 2,600 pips to the upside that you've traded. And now that C wave is being corrected. The reason why I wanted to show you is that we are getting this as a possible corrective structure that will do something like this. Okay, so now are we gonna get it here? Let's go to this level, to this area there, to that piece over there. Let's go to the 1 hour. So that is how you trade. You've got the trend, you don't look for anything in the opposite direction of the trend. You just go with the trend. Okay, so you follow the cycle, Let's have a look here. Now, what is this playing out as? So Euro Audi, you've got this 3-wave move broken here to the downside. You've got 1, 2, 3 waves. You're going to get another one here. You're going to come and retest this level here, minimum. Okay, check that one out. That is Euro Audi. I don't know why I started with the euros without the pound pairs today. Okay, but anyway, let's carry on. So we've done New Zealand, CAD, Audi, pound daily. So the pound is very interesting here. Let's see. So it's made a very clear structure. Let's see here. And if I'm gonna switch this off here, not the pound, the euro pound, guys, sorry. So you've got a passing move to the downside. You've got this running flat here. So what you have here is a 3-wave move. I shouldn't show the running flat with the same move. You've got a move down here. You've got a 3-wave move here like this, 1, 2, 3, giving you a running flat like that. We mark that running flat like that. That's what you have. And you get another pulsing move to the downside. Clear 1, 2, 3 wave move. And now that move is something like this now. Let's do this in green. See that correction? See that correction? It's not a triangle, it's just a corrective structure. Should have been a channel like this. So typically that's what it will look like. Right, so now you're getting this move to the upside. So it's a likelihood that this will come, keep going and retest that top. It does not have to. It can turn anyway. If it does turn, this is the structure that you'll be looking at. Let me remove those diagonals on the side. If it does that, you've got a 1, 2, 3. You've got a 1. It could be giving you another 1, 2, 3 like that. Okay, making this a W move, a X move, and another 1, 2, 3 wave move, making this an overall big correction for upside. Okay, but that's all so far ahead. Now you just keep looking for these ones here. So this is going to be a very slow move. If you keep doing this, you're going to keep taking it up, but I'm not interested in this. As you can see, it moves very slowly. Rather wait for this move here to end. Wait for this move to end to take it down. All right, so that's a Euro Pound, EUROCHF. EUROCHF, I'm expecting that it will correct here. It is still missing the blue box, still wants one more move down before we start that move to the upside. Let's have a look here, what I have. All right, so it's actually a 1, 2, 3 correction here, and I'm expecting it to come to that level before we come back up. Maybe not even go all the way up like that, but just a 3-wave correction like that before it continues further down. Okay, so we'll still want it to come down. Even though it is showing reversal there, that's not convincing for upside. That is EUROCHF. I think that's all the euros. New Zealand we've done, CAD we've done. Right, concludes all the euros. Now let's look at the pound pairs. Right, so looking at the pound pairs, pound CAD. Pound CAD, easy. Look for this to come down to the blue box. Okay, we're looking for it to come down to the blue box. All right, just don't have time to show you the correlation again, but watch last week's video of pound CAD and pound AUD correlation. We're looking for this to come down around this area. So we're still looking for this to be a corrective structure, and you take it down. Okay, you can look for this correction in the lower time frames, go 4 hours, 2 hours even. Okay, you can see you've got a passing move down here. You'll sell this thing here. Okay, if it breaks here below that, you're going all the way to the blue box. All right, so that's pound CAD, pound AUD. Pound AUD, same. Pound AUD, you keep selling. Every time you get corrective structures like that, you keep selling. Okay, you may eventually break that level. You actually most likely to break that level. So get a nice entry point. Okay, should have entered here. That would have been a nice entry point. So you will break that level because you're anticipating pound AUD to go all the way down to the 88 here. See, I've got so many fib levels there. Right, so I'm expecting that it will break this level and come all the way down, giving this 3-wave move. Okay, so keep selling pound AUD. Pound CHF. It couldn't get clearer than this. If I switch this off here, you've got a clear pulsing move to the downside. You've got a clear 3-wave up, and now we're coming down in a pulse. So every time you get a corrective structure, you keep selling this. Similar to pound US dollar, if you don't get a deeper correction, this may even break this level and continue like that. So keep an eye on this corrective structure like that. When it's complete, you sell it. Do not worry about what it's doing, whether it's showing reversal. It's not confirmed reversal. It can just do this. In any case, you've seen it go up like this before. You've seen it go up. You've seen it go up. So that doesn't mean anything either. All right, so you keep selling that one. Pound New Zealand. Pound New Zealand, similar to Euro New Zealand. Okay, this one is showing you downside here. You may come down here to that level. So just it may even come and retest that level on this one here. So keep selling on this one if you are interested in this one. There's no clear structure on this one, long-term trade, but I'm just showing you short-term views on the pounds. Right, so that is pound in New Zealand. What other pair have I missed? Which other pound pair have I missed? Pound CHF we did, CAD we did, AUD we did, New Zealand, all the pound pairs covered. If I've missed anything, you'll let me know, guys, please. All right, so let's look at some of the CAD pairs. Now, if I was still talking about people who send me charts on my inbox, WhatsApp, my Facebook inbox, my Telegram with charts. If you want to send me a chart, send me one with New Zealand CAD. Okay, and with a clear weekly labeling. And you should actually, when you send me a chart, you must send me a chart for monthly, daily, monthly, weekly, daily, 4 hour, and 1 hour. Because if you just send me a 1 hour chart, doesn't mean anything. Okay, right. So this is what we're looking at on per New Zealand CAD. And if you look at this one here, you'll see that there is not a single 1, 2, 3, 4, 5 here. So I'm anticipating further downside here, a corrective structure. Look out for this level on pound CAD. So from this level, you may be getting a bounce all the way back up, giving you this structure, 1, 2, and then a 3. So look out for this coming down to this level. I will actually prefer it if it comes down with a V pattern, because that's even more confirmation that we're coming down here. This structure will be a possible regular or an expanding flat. Okay, so look out for this. All right, so now looking at some of the Audi pairs. Last week somebody wanted a Audi CAD, so we're going to look at that one as well. So this is Audi New Zealand, guys. So I'm anticipating that Audi New Zealand will push further up to this level and then come drop back to this level. Why am I looking at that? Because I'm looking at this structure, 1, 2, 3, simple like that. A, B, C. Where's my C there? That's my C over there. All right, so that's what you're looking at here. So it's always easier to look at the structure without all these labelings. The labelings just identifying the structure. You've got an A, B move, A, B, C move, which goes something like this, 1, 2. It's actually going to be like this, 3. Your B is going to be complex like that before we get a move to the downside. Why? Because we've got 1, 2, 3, 4, 5, A, B, C, textbook. 1, 2, 3, 4, 5, A, B, C. You see how complex this is? This has been correcting since the end of 2015. You see here, this correction started in 2015. Actually, the beginning of 2015, because it started here. Your wave 5 ended here. You see how complex the correction can be. And if you do not understand corrections, you will not be able to identify the long-term structure on this one here. Right, so that is Audi New Zealand. You wait for a bit of a push higher to come and retest this level. The corrective structure, let it push over there. Then we're gonna wait for this move. All right, so that's Audi New Zealand. New Zealand CAD we've looked at. Audi CAD. If you look at Audi CAD quickly. So Audi CAD. So now because you've got the structures on other CAD pairs, you know that you just need to wait for this one to give you a structure and come back and retest that level at the bottom there. Okay. We're waiting for this one to come, but rather trade the ones with a clearer structure. So I'll be waiting for this one to come down here. So pick one with a clearer structure. CADJPY. CADJPY, let's have a look here. So CADJPY, you've got 1, 2, 3 waves up there. You've got 1. It is making this one here. Possible that it's going to give you this one here. One more up like that. Okay. Possibly to retest that level. All right. So that's what CADJPY looks like. Now let's look at oil. Let's look at oil. Oil, let's have a look at oil here. US oil. Okay, guys, UK oil and all the other types of oil will be similar in structure as this. That's why I only just look at one. There's no need for us to go through all those things, all those oil pairs. So now we are looking at this one as the 5th wave here that is completed. Let's just show the structure that we've shown for the last couple of days. So after the wave 5, we identified that we're going to get an ABC move. This ended as a 1, 2, 3, 4, 5. This is your B, and this looks like it's coming down as a diagonal. Two things are going to happen. Either this is complete and we're going to go. No, but I think this is what's going to happen. I think we're going to get another deeper correction like this, giving us a deeper structure like that, WXY. I don't expect that it will just reverse like that. You need to get a bigger correction, something like this, before we can look at any upside on oil, if that is going to make an ABC move, or either this is going to keep coming down. So either way, so let's look at this corrective structure. If we get this corrective structure, we're going to be getting this trade in the next coming couple of sessions. All right, so that's oil, and let's look at the indices. Looking at the indices, the S&P 500. Last week, you could see all the indices were pulling back. We did mention that those were just pullbacks. So we had this gap when we did the analysis yesterday and last week. We had this gap, and I said that this will be a pullback. So I anticipated that we're going to get something like this before we push a little bit higher. So the correction you may not always get right. Not necessarily right. You may not get the structure right, but when it is complete, you will know that it is completed. So here it has made that correction. It is now correcting in this area here. It can even come here for one like that. So remember, we have always been looking. So from when we were still here, we have been looking for this to go and test there. And now we are eventually right about there. Okay, so let's see what happens when we retest that level. Either we're going to come down for one, and then we go back. But that is very premature. Let's see what the market is going to give us when we get to that level. Okay. Anyway, it's not going to just run away like that. It's going to give you an indication of what it's going to do. So the market always gives you a chance. It never runs away. All right, so that is S&P 500. It's similar to SPY. It's similar. So let's look at the Nasdaq now. So the Nasdaq, the level that we want to break on the S&P 500 is this one. So the Nasdaq has already broken that level. It's already above that. So it's going up. It has already gone up in 1, 2, 3, 4, 5 waves. So either this is going to correct here and keep pushing higher. So if this has broken up this wave 4, because that is the same wave 4 on the S&P 500, that means the S&P 500 will not give us that one more down, that one big down that I've indicated, but rather it will just correct after around that area and give you one more up like that. So I don't anticipate that we're going to get that one big down here there to complete that structure. All right, so that is the Nasdaq. Looking at the UK 100. So the UK 100, very interesting. One of our traders, I'm not going to mention the name. I just want to see if I can see when he said that he was in the. So I won't mention your name. I just want to narrate this and just show the advantage of being in a premium group. So he called me when this was coming down here, like this, and he said he's in some big sales on this one and doesn't know what to do, so he needed assistance. So obviously, if in my trading group, I won't just tell you should have followed risk management. I try to help you. I try to get you the best way out, and this is the chart that I've sent him. Let me see if I can find that chart when we were going down here. Just a second, guys, won't be too long. So trading can be very lonely. Trading can be very lonely if you're trading alone. So this is the chart that I sent him. So as the chart was coming down there like that, he asked what he needed to do. So I said, right, so we are in a correction like this. We got WXY like that. Yes, this is coming down like this. It is at the 61. At the 61, you expect a correction here. So you may exit when you get a pullback if you want. Okay, I did not say that. I just gave him the structure, so he can decide what he wants to do with this. If it pulls back, because we expect it to pull back at the 61, we're still going to get one more down to the blue box, and then we're going to expect this one to go. But the risk is that you are in a heavy sell. If we are wrong on this one, then it means you're going to be out for a big loss, right? So you can either take half of the loss here at a bit of a lower risk, and offload the rest and see if we're gonna get a reversal here like this. Because the as much as we know the structures, we may look at it wrong sometimes. All right, so that's the advantage of having that being in a premium group. As you can see, as it was going down, it has now reversed like that, possibly looking for that correction on the 61. It is still possible for it to come down into the blue box before it actually goes, giving you this 3-wave move. All right, so that is the UK 100 and the Nikkei now. The Nikkei anticipating that this is a 3-wave move. Let's see if this is another 3-wave move that's going to come do this before we go up, giving us this 1, 2, 3-wave move. All right, so let's have a look and see how that one plays out. It does not look like it's going up as yet. let's keep an eye on it. Actually, it's rather stay away from this one because it does not have a clear structure. That is the NZDCAD in the DAX. The DAX, similarly, on the DAX, we are around this area. It is impulsive. It is correcting. You may get one more down to retest this level here. So look out for this correction. So as long as this correction completes like this, if it has not completed, you are going to possibly drop for one more around this level. Okay, so wait for this one. And this is a daily correction, something like this. A couple of days before you drop down. All right, so the Nifty, let's have a look at the Nifty. Looking at the Nifty, it keeps pushing higher and higher. Nifty has broken that level on the S&P 500. Okay, you're looking for this correction here to push even higher. Okay, so the indices, as much as they're pulling back, they are not going down. They're pushing even higher. All right, so that is the Nifty. Now let's look at the cryptocurrencies. All right, before we look at the cryptocurrencies, I just want to look at that stock that I track from India. That is Sun Pharmaceutical. And see how that one is going. We were looking at a correction previously. Let's see how that correction played out. Right, so this is the correction that we were looking at, made a running flat. I thought it was going to come down. If you remember the analysis last week, I thought it was going to come back down here and then move to the upside like that. Right, so this is how it played out. So if it made a running flat like this, it's difficult to hop on to this one here. It's very difficult to trade this one when it makes a running flat. It's easier when it does something like this, breaks the low here, then you know it's complete. But here it just keeps you by surprise and just keeps reversing. Okay, but if you remember, this is where we bought this stock here. All right, and then Bitcoin. Let's have a look at how this is playing out. So Bitcoin has made this structure. It's a clear structure. You've got a move down, which comes down in 3 waves, and I'm looking at this as a correction. One, let's have a look here. Let's have a look at what we are looking at here. And we're looking at the internal one here as a 3-wave move like this with a running flat. So possibly this one is going to push a little bit lower here. So we may get another running flat in red that does this, and then we come back down like that. So let's just switch off here so you can see the structure with only the annotation. So you'll see that you've got this running flat here in the middle. Okay, so that is your structure, which will give you a WXY move, WXY. If you like labeling a lot, you can even label this one here in red, WXY here. That's actually an ABC move, ABC move, and internally here in green, it's another ABC move, ABC. So you can keep going and going like that, but essentially what you're looking at here is that you are here and you are looking to complete this one to the B. Right, so that is the structure that you're looking for. You're looking for this one here to go down to the B. All right, so that is a Bitcoin. And then looking at Litecoin, should have the same structure as Bitcoin. You're looking downside, you're getting this corrective structure here as well. So this will still push a little bit lower, same as Bitcoin, right? And then looking at Ethereum. Okay, same, you're getting this. So Ethereum, as you can see, it is lagging the other 2 cryptocurrencies. 1, 2. The others have already made this running flat here. This one has not yet. So let's see if it's going to make one more down before it gives us that running flat here. Okay, one more down before it gives us this, and then a down. Okay, the others have already done this. So we need to see if this is going to be the one that comes in. So the others are already on this move here already. Right, so that is Ethereum, not very clear. You need to see what happens here. One more down. So this downs, one more down that we're looking at is very risky to sell because it can reverse any time. Okay, so lastly, Ripple. Let's look at Ripple. Should be similar. So Ripple has already made this move here. and we're looking for this one as a correction. It's a possibility that this one is going to come back and make this one here, giving us this one as a running flat. So a possibility for this to push a little bit higher here. You've already got a pulse, and a move to the upside is likely, and then we're going to expect that it will come down like that. So just go to the 4 hour and see how this one is going. But generally, as you can see, the cryptocurrencies are very pressed to the downside. We've got here in the lower time frame on the 4 hour, you've got 1, 2, 3 up. Now 1, 2, 3 back. Are you going to get 1, 2, 3 up, down, and then up like that, giving you a WXY move? This WXY move could be the one that pushes even lower, because it's going down correctively as it is. All right, so that's all I had for you this week. Please like and subscribe on the videos. Please share the videos also if you like them. Thank you very much, guys, for joining me this week. Good luck with your trading in the week ahead. Hope you enjoyed it. Have a great week. Cheers. Bye-bye.